Hey everyone, thanks for joining us for another awesome episode. This time we are interviewing Angella Conrard, a longtime reverse professional and certified reverse mortgage professional. So, welcome, Angela. Thanks for coming today.
Thanks for having me, Christina. I'm excited.
Me too. We've worked together in the past, and I always considered you a friend. I'm glad to be interviewing you here today.
Thank you. Thanks for having me.
Yeah. For our audience, would you mind just introducing yourself, giving us a little bit of your background?
Sure. So I am a certified reverse mortgage professional, and I have been in the industry since 2006. And it has been a wild ride and a fun ride. It's a lot of fun. So I mean, yeah. So basically, that's it. This is what I do: reverse mortgages.
I love it. Okay, 2006. So you have seen some of the most important changes I think the program has had. Looking back, how do you think that changed the reverse mortgage into what it is today?
All the changes, there's been a lot of changes. I mean, some of them have been planned and some of them have been like market driven or been kind of sudden. But I think that, as we know, change is imminent in life in general. And it has definitely made this program stronger for sure. It's all these changes. I mean, they haven't always been welcome because people are not comfortable with change, including myself. I mean, change is not always fun, but it's definitely strengthened our industry and made it more solid, I should say. I think that would be the word I would use, solid. It's definitely a solid, wonderful program.
Awesome. That's a great answer. I mean, change is not always welcome, but part of that was because some of it just changes the way we have to do business. But I think overall, it's been changes that have helped protect the consumer in bigger ways, which is good for us. It's just takes a little pivoting.
Yeah, it does. It does. And that's what it's all about is what, how these mortgages can affect and help people in their lives. So,
It's so
yeah,
has. So on that topic, I'm sure you've helped so many people.
uh,
Um,
yeah, it's been
yeah, you
fun.
have.
Yeah,
I can see it in your face.
yeah.
Are there a couple of really standout stories that you'd like to share?
Oh, there's a couple of them. What I guess what do you want to hear?
I know, right?
I
Let's
mean, there's
let's take one of your higher level, somebody who wasn't desperate. We have a lot of stories of somebody who's eating just a can of tuna a day. And that's a sad story. But there are some really high level ones too that are big financial improvements, in my opinion.
there's all kinds of different situations. The one that comes to mind is immediately is from a couple, and I did their reverse mortgage well over 10 years ago. And the wife, her name, she won't mind me using her name. Her name is Annie, and her husband was a naval veteran, and she was an artist. She is an artist and writer. And they contacted me because they knew that when Dudley passed, that his naval pension would go away and that she would be left with his Social Security. And so they contacted me because they knew that was going to happen. And we put the reverse mortgage into place for that time when that would happen because he was older. And that's what they anticipated. And that's what happened. So Dudley passed, I'd say a year and a half ago, maybe 2 years ago. And when we did the reverse mortgage, we talked about we set up a credit line for them, a growing line of credit, and we talked about them not touching this line of credit until it was needed, which was now, which was 10 years later, and it's worked out perfectly for her. So
Wow. Oh, I
yeah,
just got chills.
that was probably that foremost, and Annie's doing great. Yeah, sure.
Oh, that's so huge. So that's I mean, that's like the ideal. Those were people who really were planning and made her experience through his passing, I'm sure, so much easier.
A lot easier. Absolutely. Because I have gotten that call. I can remember another gal, another artist, actually. Her name was Pat, and her husband passed. And she called me because it was a few months, I don't know, maybe 6, 8 months after her husband passed, and she said, "Oh my God, I just woke up. I'm running out of money." After her husband, and because you're in this fog, after your spouse of how many years passes, and you're like, and they say don't make any major decisions. And, she was running out of money. So we did the reverse, and the same thing happened. We got her on some solid ground, and she was able to buy herself a little Toyota car, it was a little red car, that she needed. And and then we also, I believe that we set her up with a monthly 10-year payment, so she could have a monthly payment every month. So
Oh,
that
that's
worked out well too.
beautiful.
Yeah. So I mean, I have a number of them. And then another artist, I must love artists, because I have about 3 of them off the top of my head that, with those kinds of stories. But, I've done these for very wealthy people, very educated people. Another gentleman that was not educated, but very smart. He was a jockey. He never passed high school.
Wow.
Very conservative gentleman, and his purpose was to just do the reverse so he could upgrade his condo a little bit because he needed a little bit of extra money. Very conservative guy. So yeah, I have lots of. Don't ask a story, I'll probably have one.
I'm sure you do. I actually want to go back to that first one and just flesh it out for our audience a little bit. So for people
Sure,
who don't really understand what we're talking about, I know you and I go, oh, line of credit. Oh, it worked so well. He passed and then she'd have to do it.
sure.
Can you tell our audience a little bit more about what that means? Like, why didn't she have to do anything when he passed away? How did this line of credit grow? Just, give us a little more insight.
Sure. So the unique thing about a reverse mortgage line of credit in comparison to like a HELOC is that once you establish the line of credit, is that it is established. As long as you keep it open and you have your loan, it is there. The other very unique thing about reverse mortgage lines of credit, and we're talking about the FHA insured programs, is that the line of credit, the unused portion grows, and it grows and it compounds. And we know the power of compounding growth, right? So if you have a line of credit set up, it'll grow at the same rate as the loan note rate plus 0.5%. And it compounds over time. So for our listeners, for example, if we start off with $100,000 in our credit line and we don't touch it, and let's just use 5%. Let's just say that's our loan note rate plus 0.5%, which equals the mortgage insurance premium rate. So 5%. So if you don't touch that $100,000, the next year you're going to have $105,000. And then the following year it'll compound again and again. So in the future, you'll have more money and more cash flow that's available to you.
So for your client, they waited with, it sounds like 8.5 years until until she needed to touch that line of credit.
That's right.
Do you remember the numbers of what it started at to what it was when she finally decided to tap into it?
No, I didn't ask, to be honest with you.
I know.
No, I know it was well over $100,000, and we did discuss it many times, and I very strongly urged them to be conservative, so she would be comfortable in the future, and they did it.
That's so beautiful. And there's very little downside to that, right? Because I'd imagine from the point in time that you did this to the point in time she used the reverse, her property value probably skyrocketed.
Oh, sure. Oh, absolutely.
So-
I think so. It almost doubled, if I'm not mistaken.
Wow. Okay. And the reverse mortgage, to put it into place, what, less than 10,000, 20,000, somewhere in there?
It's probably less than $20,000.
Right? To just have that there for her. And then the line of credit, if she never used it, let's say she and he pass at the same time, then it would have just turned back into equity.
And then just would been left. It'll be left to their heirs. To her
Right.
heirs.
Right. I think these are things that people don't always consider. Is like, well, 20,000 to create this amazing situation for whatever might come. Say he didn't pass, say he had a fall, and now they needed some of that money to take care of him. And I'm just using him as the example because he was the older spouse. But, say it's something else. Maybe an adult child needs some help. They have this line of credit already ready for them, no matter what comes. And in that situation, I would imagine, I haven't been through this myself, but I would imagine there's a lot of other pressing concerns than finances when a spouse passes.
It's a lot to take care of. And it's a big difference in being a caretaker in your 40s in comparison to your 60s or 70s or even your 80s. You know, your capacity for some people is not as high, and it's a lot to work with. There's a lot of paperwork, you're working with. You're doing Medicare, Social Security. She was working with the VA. A sick husband. There's a lot of responsibility when you're a caretaker, and to have that piece in place, it's a great comfort.
Oh, I mean, you point out so much that I can hear in some of my clients' voices. A lot of my clients don't find me 10 years in advance, for whatever reason. A lot of my clients end up being at the point of stress. And you can hear it, just what you're saying. Don't make decisions for years, the common guidance. But
Mhm.
gosh, if you haven't financially set yourself up, you kind of have to. And now you're making a decision about a reverse mortgage, which is this big, scary, unknown thing to a lot of people. Oof. If anybody, oh, sorry. I just couldn't.
It's a big thing, and we are on that verge of that. What it's a commonly used term these days, that silver tsunami, right? So we are on that verge, and we're going to hear these stories more and more. Culturally, more of us are going to have the silver hair, you know,
Yeah.
very quickly. And
Yeah.
that'll be who, a majority of our population is folks my age.
Yeah.
And quite honestly, Christina, that's how I got into this business, because I knew, I'm at the lower end of the boomers. I
Mhm.
knew that big, population, everything that they experienced in their life, that was going to affect what I experienced in my life. So, the cultural changes when I was a kid, you didn't see people with silver hair on TV. They were young.
Oh, that's interesting.
Yeah. So, yeah, isn't it profound?
Yeah. I
Yeah.
mean, it's the largest population. If you look at demographics, the boomers are this big population, and then the Gen X is little, and then millennials are pretty big, and then the next generations are tiny. And it's like if you put a lines, it'd be like an upside down triangle.
Mm-hmm.
And I mean, we can go into the Social Security thing, but that's not probably for this session. But Social
Right.
Security doesn't really support that upside down triangle.
No, they don't. And we are living longer, and the boomers we're a little bit of rebellious type, folks. We want to live our lives, and, we want to be free, and that kind of thing. And so, yeah, I think reverses are going to come into play more.
I honestly love that about the boomers. So I'm technically a millennial, even though up here sometimes I'm a boomer.
Mhm.
And the boomers really, I think you guys taught the rest of the generations that follow how to have wealth. I mean, we see it in the numbers. I think senior home equity is up to 12 trillion right now.
But you go at that point, you have that challenge where it's home equity. How do you tap into that, Christina? And
Well,
how do
you
you,
tell me,
yeah,
Angela.
and how do you tap into that safely? Obviously,
Safely, yeah.
plan is the first step, which, we as Americans are not that great at, you know. So, that's, culturally, we need to embrace planning some more, I think.
I think that's true. Yeah, I think that's very, very true. Well, and it sounds like you help your clients do that in a pretty big way.
I I do, and my style is not intrusive. So in other words, I like to encourage and say, well, have you thought about this? Have you thought about, working with a financial planner? Are you confident in financing your life? Are you confident in, financing your life in this home? Do you have the support services that you need? Does your home have the things that it needs? Because if you're 65 years old and you may need a roof in, 7 or 10 years, that's a big purchase and something to plan for.
Yeah. I was just talking to someone earlier who said their client just by the skin of their teeth got the water heater replaced. And so they said, "Oh, we don't need the reverse mortgage right now."
Mm.
And we were both like, "Okay, what?" So is that the last thing the house is ever going to need?
No, there's so much. I mean, and lately, I don't know about you, but I've been getting, in 1 week, I had people calling me because they need money for their teeth.
That's a very common one I'm seeing too.
It
And it's
is.
huge bills.
Yeah, it is. It is. It's 50 grand for a whole new set. I mean, it's just, and yeah, I mean, it goes back to what we were discussing earlier. They're living longer. Parts wear out. How are you going to finance that?
And teeth, you can't, I mean, I guess you can live without teeth, but gosh, I wouldn't want to.
No, exactly. Right.
And if I was sitting in a free and clear house with 400,000 or 800,000 in equity with no teeth in my mouth, I'd be kind of looking around going, is there some way out of this?
Yeah.
And there is.
Yep. There is. Absolutely.
So,
In a safe way.
one thing I do want to make sure we touch on is the CRMP designation.
Mhm.
What's been your experience? I think you were around for the earliest designation times, weren't you?
I was actually at the mastermind committee um where we had all these professionals from all over the United States that got together and talked about it before it even had a name.
I didn't know that before starting. Please tell us everything.
Oh, well, it was a bunch of professionals. Let me guess how many, probably about 20. And there were underwriters, loan officers, executives, of course, our association professionals were there. And it was hosted by Normal, our association, in Miami. And we were all there for, a week, basically talking about what this designation should look like, you know, what should it entail? What would the testing be like? What kind of questions are we going to ask? What are the requirements? And myself and another loan officer from Colorado, we were the loan officer representatives, kind of inputs thing. So, yeah, it was pretty interesting. A lot of
Wow.
it was over my head. Let me
Well,
tell
I mean, that's a room full of a lot of different aspects of this loan. It's not just the originator.
Oh, no, it wasn't just an originator. No, these were the executives. There was multiple companies there, multiple levels of education. I'm considered a veteran, but these were, multiple war veterans. They've been around in this industry from sometimes the beginning. Um,
Wow. Yeah, at that point in time, well, some of them still.
Yes, exactly. And just go back to your point. I mean, the um a certified reverse mortgage professional is our highest designation, and it is so important to work with someone who knows what they're doing with these loans. And the requirements, is you have to have at least, correct me, you probably know better than I do. You have to have at least 3 years worth of experience and have done so many loans, and then you're tested, and then you're background checked, and then there's continuing education that's required, and then also that just collectively there's this group of professionals really have the intention to help people. That's really what certified reverse mortgage professionals are definitely helpers.
I would say so. And it's a designation that you're right, it's hard to get. The loan count is 50. It's 50 reverse mortgages closed, which is, it takes people some time to get there.
It does. It takes a while.
I think it's good. It should. This is a designation that says, oh, that was the other part that says, I am not only knowledgeable, experienced, but I'm also ethical.
Yes.
That's right before here, I realized my ethics signature and code of ethics was due this year. I signed it and sent it off. That's something we do every single year. And every year I read through it and say, what is it I'm agreeing to? And nothing is new on that list. I live it. You live it. It's in everything that we do and how we go about
Yep.
this.
Yep. I send out the list in my information packages to my clients and have it on my website. So it is very important because you want someone who has the courage to say no to you. Also, hey, if you're indecisive, or maybe you're living in this 2,500 square foot house by yourself, and your kids live halfway across the country, and maybe this is just too much, and maybe you need to think about that. And I'll be the first one to say that.
Absolutely.
These are your choices. I have a lady right now that I'm working with, and she has a long-term care policy that'll help her pay for a facility. It won't help her in her home. But, and I said, well, why don't you sell and you can go into one of these fancy facilities? You know, you have this policy. And she said, well, I'm not ready yet. I'm like, okay, you know, it's your choice, you know, but these are questions that I asked because, you know, these are her choices. You know, she has the ability to do that now if she wants to, but she's not ready, you know.
Yeah. Well, and that's one of the things I love that you brought up, because so many people think when you get a reverse mortgage, you're stuck. And in her case, as I've seen some of my clients do, it is just a period of time that the reverse mortgage serves those needs. It's not a forever. Sometimes it is, but for somebody
Mhm.
like that, right, she's using the reverse mortgage to get from here until there. And when she's ready to move in to the
I did
facility.
one, I did one loan years ago. Um, and this is probably, it was probably my most complicated transaction I ever did. And it was a short-term use of a reverse mortgage.
Oh, interesting. It's not that common. Tell us more.
Well, it was a very unique property in New Mexico, and it had several different parcels. It had 3 different parcels, and it had casitas on one parcel, and a home on another parcel, and shared well and shared septic, all these things. And we parceled off her home. This property was a lovely property, but it was way too much for her to manage. She had been running an art gallery out of one of the buildings, and she really need to get on solid financial ground just so she could regroup and sell the property, because it's a very, very valuable property. So we were able to parcel off her home, do the reverse on that, so give her some financial relief. And she just wanted it for 5 years, which she did. And she did what she needed to do, sold that property for, you know, a handsome amount of money. And then actually just recently this year, she contacted me again because she had purchased a property with her proceeds for cash in Santa Fe. So we did the reverse mortgage on that property. It was paid in full, and she's not going to touch the line of credit for 10 years because that's when she's going to need it. So it worked out very well for her.
Working with someone like you model that and show them, hey, this is the power of waiting 10 years, what it'll actually look like for you in the future.
And we went back and forth because it's not, you know, people, you know, for the most part, you know, reverses were, you know, had the reputation of being the loan of last resort. Hey, I'll get one when I need it. Whereas, you know, what we really need to nurture for all of us is that planning, right? So we looked at it. We looked at, okay, let's do the reverse now, and then we'll have line of credit growth for 10 years. Or let's look at it. If we did it in 10 years, we can calculate the potential value of your house, and the market's going to be different, but we can take a look and see what your proceeds would be then. And it actually was much more advantageous for her to do it now and enjoy that line of credit growth for 10 years. Excuse me.
Have you ever seen a case where that's not the case? I'm going to take a sip too.
Elaborate, Christina.
Oh, where the line of credit, setting it up now would not be as advantageous as waiting to do the reverse till some point in time.
Not normally. No, it's much better to do it when you're younger, and enjoy that line of credit growth because
Let's
you have more money to work with.
You have more money to work with, but also I want to flesh out for the audience. The idea is that you can access more money as you get older, but it's like less than 1% per age older, right? A 63-year-old can access a little less than 1% more than a 62-year-old. 64-year-old can access a little less than 1% more than a 63-year-old. So it's a little, in general, it's not linear. Different ages have different, we call them PLF
Yeah.
changes. However, the key here is you were just talking about a growth rate of what, 5%? I think in today's market, it's a little bit higher than that.
Yeah, it's closer to 7. You're right.
7%, a 7% change year over year, if interest rates were flat, which they're not, but 7% versus 1%. That's why that growth rate is so amazing. You can set this thing up early, let it grow into this large amount, and your neighbor who had the exact same age, home value, mortgage you're paying off, everything else, waits to that point in time, and their line of credit they establish at what, let's say both people are 80, is so much smaller.
Yeah, in her case, we were talking about $50,000, which, that could be half. That's either like a full year of income or, or a half if it's, supplementing Social Security, right?
Yeah.
I mean, it's a lot of money.
Yeah. It's a lot of
So,
money. And oh, sorry, keep going.
no, so it's worth it just to look at all the angles. Reverse mortgages are, in my opinion, it's an emotional transaction for many, many people. For most of my clients, I think. So I mean, you make the decision, with the facts, right, and with your head, but really the real decision comes from your heart. You have to feel good about it, and it has to fit you.
Absolutely. So let's talk about that, because probably somebody watching is going, yeah, I do have a lot of emotions about reverse mortgages. What are
Mhm.
some of the emotions that you see through the process?
You know, I think insecurity. Is this the right decision? Am I making the right decision? So I mean, it's very important to, as a loan officer, to listen to people. And what comes to mind too, is that oftentimes there's a lot of things going on at that age, right? So you hope that you're healthy, but sometimes, your spouse maybe not be healthy, or maybe you're talked to one of my clients this morning, and she was having trouble with her knee because she's facing knee replacement. So there's a lot going on. It's kind of like when you have young kids, Christina, which that subject intimately. There's a lot of needs. There's a lot of things you need to plan for you. There's a lot of things to think about. I'm sorry, ask me another question. I kind of got lost in my own head.
Some of the emotions. I mean, you're addressing it. You're dead on.
It is, if you're working, when I work with, the lawyers and the accountants and the engineers, they're much more logical. And I like working with those guys because their emotions are about analysis. As
Yes.
long as they can go through all their analysis and over again, and that's where their emotions feel comfortable, right? They're comfortable with those numbers, and that. But if you're talking to an artist, which I've done, quite a few of these loans for artists, they just wanted to know that they have money to spend. They want to know that their house is comfortably paid for, that they don't have to worry about paying their a mortgage every month, or that their taxes and their insurance is paid. They want to feel secure. That's their emotion. That's what they're going for.
Yeah. Yeah. Do you find that the reverse mortgage satisfies that?
Oh, without a doubt. Yeah, it gives many people an opportunity to kind of clean things up. Also, I don't know if you've experienced that with loans. Some of the
Tell me
files that you
more.
work with. So for example, I did one not too long ago, actually last year, for a couple, and she didn't remember that she had a trust. The couple didn't remember that they had a trust. So, by starting the reverse mortgage process, we discovered that the property was, indeed in a living trust. And so we were able to locate it, and do the reverse mortgage, and the house remains in the trust when we do a reverse mortgage, as you well know. And for our consumers, we don't take it out like in forward mortgages, we keep it in. And she actually called me probably about a month ago, and unfortunately her husband passed. She couldn't locate a copy of that trust, and I had a copy for her. So it's an opportunity. We get to clean things up. There was another file that I had, and they remembered during the reverse mortgage that the son was deemed the executor on their trust. Well, they had decided that the son was not the best candidate, and it really should be the son-in-law. So this was an opportunity for them to redo their trust during the process of doing the reverse mortgage, and get things on the ground that they wanted it to be. That's the words I'm using. So that their what's the word I'm looking for? Their items or their life was in order for when they pass, basically.
Yeah, that's big. I mean,
Yeah,
I've had
it is.
clients
It
like
is.
that too, where we look on title and say, okay, I'm seeing this name. Who is that? And they're like, oh, I
Yep,
forgot that
exactly.
person was on title.
Yep, it's cleanup time. We get the opportunity to clean things up for our clients. Absolutely.
I had another originator. I don't know where this contact came from, but um one of my coaching clients, he had someone do a search for assets and found this lady who had just forgotten that she had this account with her husband who had passed a long time ago. He found $800,000 for her.
Are you kidding me?
Uh-huh. I mean, I'm not
Wow,
kidding. That's isn't that amazing?
that's amazing.
I'm like, what kind of stories are these? Like, it's just life changing, right? And for him, that was just a simple little search. Hey, his friend, do this asset search and changed her life entirely.
Well, I have to share with you that I absolutely love your t-shirt. And one of the reasons is because that's one of my archetypes, right? I like to be the heroine.
Mhm.
That is one of the archetypes that I identify with. I always have. I like helping people, that's my gig. I like to be the heroine in the story. And so when I have that opportunity, I'll step up. Absolutely.
Yeah. I think a lot of us identify with that, because whether we're helping somebody like your first story, when their spouse passes, they're going to be okay and they're going to not have to worry about at least the financials. Or you get the client who is living in a home that um, hasn't had any maintenance done in a long time. There's
Mhm.
another interview on this if for you viewers, if you're interested. There's another originator telling a story of how she went to the home and the walls were torn apart. It was hoarding and a mouse ran across her lap.
Oh gosh.
Yeah. So, I mean, whether it's that and she helped that person, I mean, that was just absolutely amazing. Or if it's, helping somebody never get to that point. I really think, reverses get this bad rap. And once you actually know the people that do reverse and how much our hearts are in it, it's like, how could this possibly be a bad thing? And that's part of the reason I started the channel too. I want to show the world, like, the people who do reverse mortgages are some of the most amazing people I've ever met in my life. We're knowledgeable, we can do financials, we're caring, we go and strap the water heater and fix the smoke detectors when we need to.
Well, here's the funny thing is that if you ever have the opportunity to talk to some of the reverse mortgage executives, a lot of those folks, they started off as loan officers like you and I, and then went on to become executives in these lenders. But they will tell you these stories. They all have stories like you and I. They all have stories where they were the heroes and the heroines. They have a passion, for helping people. And I have seen, multiple lenders step up and make exceptions for borrowers when needed that were like not in the book, so to speak.
Yeah.
So this is an industry that cares.
Oh, absolutely. All right. Well, thank you so much for being on with us today. I have one final question that I like to
Sure.
ask. If you could change the American retirement, how would you change it?
I would change it in a very similar way as I would change some of our challenges that we have in this country around health. And I would make it more of a cultural, acceptable way of being to plan for retirement. Like I would make it a cultural and acceptable, desirable way is to exercise and eat healthy. There was, years and years ago, there was, a majority of Americans smoked, right? We don't do that anymore because we changed the way we look at it and how it's no longer acceptable in our culture, so to speak. It's I mean, or it is acceptable, it certainly is legal, but for the most part, there's not many of us that smoke anymore because we know that it's not all that great for us.
Right.
Whereas I would do the same thing with retirement and also health, as I would make it culturally desirable to be healthy and also to plan for retirement. That's what I would do.
I love that. There's an influencer I follow, and she's in her 60s, and she's in great shape, like incredible shape.
Hmm.
And she gets comments about being older in the gym, or she just makes it more body positive for whatever age. And one of the things she posted was, in 2060, it will be normal to see a woman in her 70s pumping iron in the gym, because she was talking to my generation, right? It's pretty
Yeah.
normal to see millennials of any gender in the gym. And yeah, in 2060, that's going to be the norm because of the culture shift, like you're saying.
Hmm.
And as you were speaking, I was hearing, oh, it goes hand in hand, because the healthier we stay in our bodies, the less medical expenses, and the healthier we keep our finances, the healthier we keep everything about our lives. I 100% hope that you can be president and go and change the whole culture for this, because that would improve our entire world.
Preventative health and is always best. I mean, you always have people that need extra help, right? They have situations where they can't, something they can't help, it's out of their control. And same with finances, right? But if we can plan and we can cultivate, the idea of planning, then we can lower those instances where people are poor as they're old, so that they're more comfortable, so that they're it that that we can go through our lives with joy and ease, right?
Yes.
There's nothing more stressful than having health challenges and financial challenges. That's down in the lower part of the Maslow's triangle, right? That's the or the first chakra, if you use that terminology, right?
Yeah.
So it's at the bottom of the triangle. These are that's big stuff. Health and house. That's basic stuff.
Yeah. All right, Angela. Well, thank you so much for being on with us today. And we will see you next time.
Thank you, Christina, for the opportunity to share. I appreciate you. Thanks
Thank
for all
you.
the work you do.
Oh, you too. Thank you so much. All right. And thank you, audience, for joining us.